What's going on, viewers? It's Chris over here at VerrilloTrading. Good morning. It is 11 a.m. in the USA. If you're joining us in the afternoon, good afternoon to you. Good evening if you're somewhere else on the other side of the world. In this live stream, I will be going over all kinds of trading related topics. I wanted to do a live stream here just to get reacquainted with some of you guys. I've been kind of not necessarily out of the loop. I've been doing quite a lot of work on my trading for the last few months and doing a lot of trading. For some of you guys that don't know, I've been trading since 2019, so I think that makes something like 6 years at this point. And I just wanted to chime in to share with you guys some ideas I have about the financial markets, about trading. Some of you guys might be very new to this, and feel free to ask questions. This is going to be a learning space. So, just to give you guys some full information about me, I am a part-time day trader. And also I have a number of longer term positions that I maintain as well. I do not make full-time income from trading, although maybe I will one day. I have my thoughts on how trading works, how the markets work, and I really think that some of you guys, especially if you're new to this, a lot of you guys need a bit of a wake-up call in terms of how the markets work and all this stuff. So let's get started with that right now. So I've got two camera setups here. I got two basic camera layouts, and I also have the stream going on Telegram. So like, for example, look, you can see here, now you should see my screen and the camera. Let me know if you guys hear everything good. And we have 3 people listening on Telegram. I'll drop the link to the Telegram in the chat on YouTube in a moment here. Actually, if one of you guys can do that, that would be fantastic. But it's basically just t.me/VerrilloTrading. You can just find us here on Telegram, and at some point later, you'll be able to come in and ask a question if you have a specific question you want to ask, or you can just drop it right into the YouTube chat. Okay, so let's do that right now. Let's talk about it. So I've got my 2 Sierra chart windows here open if I wanted to demonstrate anything for you guys. But the title of the stream is basically Markets Don't Work the Way You Think. Gregory says, are you back in Canada? Good morning. For the moment, I am, yes. And the reason why I named it Markets Don't Work the Way You Think is because, well, I guess as a trading content creator, I often have the chance to speak with many different traders. Some of you guys are very new to this, and some of you guys are more experienced. And what I find is that when traders get into trading, it's very, very common that you guys start to build your own narratives about how the markets work. And most of the time, those narratives are just simply incorrect. That's just not how they work. One example I can think of right off the top of my head, so we can talk a bit about black boxes, and then we'll get into roasting some guys on X and Twitter, because the stuff that the X influencers post about trading, in my opinion, is just completely level 1 advice. It's not helpful at all for really developing your trading. And it's just promoting a lot of fallacies about how trading really works. Some of my ideas, you guys might find them to be a bit extreme, a bit absurd, and because some of it is counterintuitive to what most people tell you, like about risk management and about growing an account and all this stuff. But we'll get into it as the stream gets on here. Just leave something in the chat if you're here and listening. I appreciate you guys listening here, and if you guys have any questions for me, I'll answer the questions real quick and real fast. If you guys want to know more about me, where I come from, what I do, how my trading works, and all this stuff. But I'm gonna go over some of this stuff now. So I have a family member, if you guys have been following my channel, that has been getting into trading and investing pretty recently. And as I've been witnessing their growth in learning about how the markets work, I kind of see them falling into a lot of the same pitfalls that I may have fallen into when I started investing as well. Welcome. Thank you for joining us, Cheek. What's going on in Paris? Bonjour. Bon matin. Faut prendre un peu de café ici. If you don't have your morning coffee, make sure to get that going right now. So we'll let the comments flow in, and I'll just talk a bit about what I think about black box indicators and that. So there's kind of a fallacy that new traders fall into regarding trading indicators, and they think that they can rely on a black box to trade for them. And I see this over and over again. People they gravitate towards this idea that you can trade profitably using some black box that somebody wrote for you. Let it be a trading view indicator or some sort of automated trading system somebody developed for you. And honestly, that could not be further from the truth, and I'll explain exactly why. So a black box, in case you guys don't know, it refers to some sort of trading system, some sort of trading rules that you put together, and that trading rule set is supposed to generate either a buy or a sell signal at any given time in the market. So for example, the market might open and 10 minutes after it might generate a buy signal, and then that says, okay, now it's time to buy the market, put your stop loss here, put your target there. Now, when you look at it in hindsight on a chart, I'll just bring up a chart, just for fun. And actually, you know what? I think I have TradingView here. Maybe I could open up my TradingView real quick. When you look at the signals on a chart, they look great in hindsight. Hindsight is 2020, obviously. Let me see. Am I still logged into TradingView here? Because I think I have this black box over here. No, I'm not logged in. But let me see. Let me try and get logged in. I think get logged in pretty quickly here. Sign in with Google. Sign in here. I have to get the Authenticator app. One moment. All this security these days. Because I want to show you guys an example of a particular black box indicator that my family members is using, and they're kind of getting all hyped about it. So for example, here, let's have a look. So I'm over here on TradingView now. You guys should see my screen. Let me know if you see my screen right here. I'll just double check that. Yeah, you guys do. Okay. So you see, I'm looking at this 15-minute chart. You can see there's momentum up, momentum down signals here, right? So this is an example of some sort of a black box indicator that generates buy and sell signals. Now, there's nothing really bad that I have against these particular signals. It's just that the problem with them is you cannot trade only on this. And when you tell that to somebody who's just getting into it and who has that like euphoria and hype about, oh, we're gonna make a bunch of money, or oh, we're gonna do this, oh, I'm getting to trading, I'm all hyped and excited about it, they really don't want to hear that. They really don't want to hear somebody bringing them back to reality about the fact that you cannot just trade using one indicator like this, some sort of one indicator. And the reason why I tell them that is pretty simple. It's because you need more than one indicator to trade. You need knowledge and understanding about how markets work to be able to make good decisions trading. And I'm going to give you guys proof of this in a second here, because I've been on quite a good run in my trading for the last 3-4 weeks here in May. You know, there's the saying, sell in May and go away, but I've been fade in May and go away was my saying. But still, I got caught pretty bad on Wednesday, and I stopped trading Thursday and Friday simply because I had to reassess my understanding of things a little bit, because I got caught pretty bad in a move on Wednesday in a particular market. Now, the market that's in question here on this chart is not important here. I was just kind of explaining to you guys a concept. We'll put Bitcoin on there for fun. So let's just see here. So apparently we got 34 people watching. Thank you for joining. I really appreciate you guys joining the live stream today. And just, let me know where you guys are watching this from down in the comments. But I guess, it doesn't really matter that much. These days, everybody's interconnected. So you could be in Central America, you could be in Canada, you could be in Europe. It doesn't really matter. So let's talk about it. Why do I say that you need more than one indicator to trade? Well, it's pretty obvious. You could probably think of an analogy about this relatively quickly. It's kind of like having your driving teacher next to you at all times telling you what to do. As soon as the driving teacher gets out of the car, you're going to kind of have an idea of what to do, but you're kind of still like, you don't know what the hell's going on, kind of. So an example of this that I could give is certain times of the day of the market make a difference. And these things will trump indicators like 90% of the time. So you could have a black box signal that's giving you momentum up, momentum down, and things like this. But the problem is, you have to remember that this is a strict formula and it's not accounting for various things that could be out of the data set. And so in statistics, I'm far from a math expert, far from a statistics expert, but in statistics, they call these things fat tails, which are the parts of a data set or elements that might happen over the span of a particular data set that end up way out of the average element that fits into the data set. So some of you guys could come in and correct me on that, whatever. But basically it means that there's certain events that are going to occur, that are bound to occur over a certain time period that are going to disrupt that data set. And as a trader, as an investor who has an understanding about how a market works, you need to account for these events that could potentially throw your data set way off. Some of these things could be the open and close times of a market, news, fresh news that comes out and distorts the price action, distorts the sentiment of a market. Could be someone tweeting, like Trump tweeting on his Truth Social app. He comes out and he starts tweeting about Syria and then something happens, right? All of these things have the potential to completely disrupt any black box that you might have, any rule, any set of rules that you have that give you trading signals. So I might have a signal that says, okay, whenever the market moves this amount based on what I'm categorizing as fair value, I'm willing to buy it or sell it, depending on if it went up or down. Fine. But if you're not accounting for, as soon as the market opens, you have volatility. At the top of the hour, you might have a new algorithm that turns on that changes the course of time. You're going to get ruined doing that. And that's why I find a lot of the times simple sets of rules, they often fail. So I sometimes get emails from traders asking me about how to implement a certain system in Sierra Chart or in one of these other trading softwares. So like, for example, recently there was this one guy that had this thing called a cycle indicator, and it's kind of like a momentum-based indicator that kind of like, it's like an oscillator basically. And it's interesting, like I put it on my charts just to examine what it does. And in his mind, he may have been considering that he could potentially trade using only that. I don't know if that's exactly what he wanted to do. But at the end of the day, what I'm trying to say is that you can't just trade only on one indicator. It's just, you just completely can't. It's impossible. If you guys think you can trade using only one indicator, go in the comments and challenge me on that right now, please. I would be willing to challenge you on that idea, because it just does not make any sense to me that you can trade successfully using only one indicator, one concept, one strategy, one tool out of your toolbox without understanding the overall context, understanding having a big context about how the market works. Marek says, sometimes you speak so fast, my brain just freezes like my computer. I gotta slow down. Thanks, Marek. Thank you, thank you. Good morning, good morning, good morning, guys. Good morning, Fortnite. Good morning, Raphael. Good morning, Cheek. Good morning, Gregory. Good morning, anybody who is in the Telegram chat. If you guys are listening on Telegram, eventually I'm going to open the floor for questions there. So definitely stay tuned for that. Let me see. I think it was over here. So we have two people listening in the Telegram right now, Rick and James. What's going on, Rick James? Rick James, bitch. So that's what's up. Black boxes, my friends. So I would say my trading is kind of, in a way, there is some black box element to how my trading works, because I have some models that help me operate in the background of my trading. But that doesn't mean that I trade only using those models. I may run a back test on a particular model, a buy and sell signal that I create. But while I'm running that back test, I'm understanding that there's going to be various things in the data set that throws off the trading. And there may be one trade out of that thing that completely ruins the entire sample set because of that reason. All right, fine. So Raphael says price action itself is the only one really. So you're saying that you can rely on price action only. And I think that I would agree with you to a degree. Reason being because the price is ultimately reflecting, it's the most real-time indicator you can get. I mean, looking at price, I was talking with a client yesterday, and he's kind of new to trading, and he was telling me that he just kind of feels the chart. He likes to feel the chart. Now, some of you guys might think like, wait, like, sure, you know, he's feeling the chart. Does that really work for somebody who's not that experienced? Well, the answer is probably it doesn't. The guy doesn't have enough screen time yet to really feel the charts, get a feel for the charts. But I understand what he meant, because when you have enough screen time behind these things and you've watched like hundreds of market opens, eventually that feel aspect is something that you could rely on. It's something that you could lean on to make better trading decisions. Okay, now I wanted to talk a little bit about risk management and some of the absolute garbage that people post on X. Because guys, I literally scroll X for like an hour a day, and I'm just completely appalled at the kind of level 1 crap that these people are posting on X about trading, whether it's related to risk management or whether it's related to trading a specific trading strategy. All of it is complete garbage, and all of it's relative. I made a video at some point way back called all advice is level 1 advice, or all advice is trash. You guys should go watch that video because it's still relative to this day. It's still relevant, I meant. Now, let's talk about risk management real quick. Now, I know this is different for everybody, and I want to talk about growing an account. How does growing an account actually occur? How has it occurred for me? So like I said, I've been doing pretty good last few weeks, last few months. Overall this year, I'm green in my day trading account, which is a good sign. You know, I could be green in my investment accounts, fine, whatever. But really what matters is, are you green as a day trader, in my opinion? Because that's where the real blood, sweat, and tears is. I mean, you could have a long-term idea and say, okay, I'm investing long-term in gold, set it and forget it. If it's working, add more. If it's not working, you scale in a little more. If it's really not working, you may cut it. But the real blood, sweat, and tears of trading is in regards to day trading. Now, I know some of you guys are going to be like, well, day trading is a losing strategy. There's always going to be someone in the comments saying day trading is for losers. You're always going to lose money day trading. But I've been trading long enough to inform you that that's actually false. If you know what you're doing, you can make money day trading. You may not make life-changing money. You may not make a full-time income day trading, but you will make something, and you do have the potential to grow an account. And you also, you know, and also what I was saying to my family member about this who's into trading is that the real reason behind your trading shouldn't be monetary. It shouldn't be monetary. But again, I think that that's a relative concept, because it really depends on your trading, and it depends on why you trade and why you do this. So I'm kind of going into a lot of stuff here, but let me look here. So yeah, Heart Metal says one bad news headline throws off everything. Yeah, if you were to argue that you only use one indicator, it's price. Yes, although I would still say no, because once you develop a trading system, there are certain other elements that you derive from price, and then those things become their own indicators on their own, and they're derived from price. So for example, look at this chart. It looks like a complete mess, doesn't it? Some of you guys looking at this are gonna be like, what the heck is this? There's way too many lines here. I don't know what any of these lines mean. But believe it or not, each one of these lines has significance to me. I may not trade off of each one of them, depending on the context of the market, but each one of these lines means something. So let me zoom out and show you. This is okay, so let me go back. This is a 15-minute chart of ES. I can remove some of the lines, like, oh, sorry, that was the wrong button. Let's remove some of these lines, and I can't do that all on this chart. I can do it on, one second. I can do it on this chart. I can hide all of these levels. So now you can see there's no lines on the chart. So that would pretty much be just price, right? But my indicators that I have here are derived from price. They're derived from price. So when I take out this and now I have these orange lines are derived from the monthly chart. They're derived from a monthly chart, and all they use is price to generate those lines. So open, high, low, close of particular bars that might have happened on the monthly chart in the past. So in this case, these lines come from 1/1, which would be January. Yeah, there you go. January. This one comes from March. This one comes from August of last year. This one comes from last year, the 4th month. So I'm really a believer in indicators that are derived from price, for example. So these are lines that come from the weekly time frame. Now, what I'm trying to say is that I understand everything that's going on this chart. Now, I don't use all these lines. In fact, some of these lines are no longer relevant because the way I have the system that draws them, some of the lines get drawn in the past and I wouldn't trade off of them now. But the more relevant lines are the ones that are not darkened. So this is a one-day chart for S&P 500 futures. So a big level that we had this week, and I know I'm going into a lot of different topics here. I don't want to go on too many tangents. But really what I'm trying to get across is that you can't trade just using one indicator. If you guys are just joining, remember to leave a like on the stream. I appreciate that. And leave your comments down below. I'm happy to answer any of your questions and comments. A monthly level like this, 5,900. Now I know hindsight's 20/20, but I was having a call with a trader of mine. I think it was on Monday. Was it on Monday? It was the 27th. So that would have been Tuesday morning, okay? Monday was a holiday. And Tuesday morning, I was looking at the markets. We had this big sweep down, and then we had this reclaim back up, 5,900. And then we have this big monthly level here. The way my system categorizes it as a monthly supply-demand level. And what we had was a reclaim of that level. And I remember my trader friend that I was talking to Tuesday morning, he's like, well, I'm looking for, I don't know what I'm doing. I might look for a short. And I remember telling him very clearly, I'm not interested in shorting this. I'm not interested in trading this. I'm just, if I would trade it, I certainly wouldn't short it because we have a big reclaim of this monthly level right here. And there was no other context that was there to potentially stop the market. So to give you guys a bit of context about my trading, I'm honestly a bit more of a fade trader. I'm the primary bread and butter of my trading is fading the market. And some of you guys might say that's insane. Like, why would you fade the market? It's proven based on some other data set that betting against the market trend is not profitable. Well, I can tell you otherwise that I've been fading the market pretty much all of May. And what I mean by fading the market is I don't mean putting on a trade and fading it and going against it, and if I'm wrong, staying in the trade. No, what I mean is you fade it based on a defined area, and you give yourself that whole area to work with. It's not just one price. I have a range of prices that I work with when it comes to fading the market, and also there's time that comes into this aspect too. The faster the market moves into an area, the more likely I want to be fading it, or at least getting a piece of it on. And I'll know right away if it's working or not, typically pretty fast. So yeah, I'm more of a fade trader. So what I'll do is something like, just as a quick example, I will take a level like this, like 5,925, and I'll draw an extension up and down from that level based on the current level of volatility that we might have on the current day. And the way I get that is using a model that I've been working on for a while that I'm still kind of tweaking to this day. That it uses a mix of average true range, standard deviation, and it's sort of, the goal of it is to obtain a reasonable level of how much the market is moving today. And what I'll do is I'll use that model and I'll draw an extension up and down from some of my key levels that are generated from larger time frames. And then that'll give me context, because sometimes what I'll see is, let's say we have a big reclaim up of a big level like that. How it reclaims it gives you a lot of information about what the market is likely to do next. So if we just go straight through it and we're closing above it and the market doesn't look like it wants to reverse, I mean, that gives you one signal. As opposed to if we reclaim it and then it reverses back, trades down to the lower extension of what I categorize as my extensions, below what I categorize as my key level, it bounces off the low end of the extension and then it goes back into the range, like around this 5,900, and consolidates here. I would have most probably been using that as a long signal because it's still telling me that the market is within that range. And there's either going to be some back and forth movement there that I can potentially trade, and that other market makers are potentially using that particular similar range to trade off of. So you're likely to get more back and forth, as opposed to if you get a clean reclaim like this and then it just going straight through. It all depends on how you see things. So, you know, it's a whole puzzle. The markets are like a whole puzzle that you have to piece together, and you cannot just trade them using just one indicator. That's kind of what I'm trying to get across here, the main thing. All right. Okay. You guys have any questions about that? Leave them in the comments. If you guys are just joining, let me know. If you guys don't know who I am, my name is Chris. I run this channel here, VerrilloTrading. Mostly I make videos about trading software, but every now and then I'll do a stream like this that goes over trading when I get enough of that, I want to say motivation, to get up here and just start blabbing about this garbage. Which it's garbage, but it's stuff that has the potential to change your trading if you dedicate yourself to it enough. Yep. Let me take a quick sip of coffee. Let me hear you guys in the comments. I want to see what you guys are talking about. If you guys don't know what this software is, it's called Sierra Chart. It's a very popular charting software. I do use this as my main charting tool just because it gives you more flexibility in doing different things. So for example, the main one problem with Sierra Chart is that they don't have access to very obscure crypto markets, although you can get some altcoins if they trade on Binance and all that. Now, my family member who's into trading crypto and stuff like that, the one who thinks that you can trade only on one indicator, which is false, he was trading this one coin here called ZBCN, and it was pumping up recently. And what he asked me about this, and he's asking me, what do you think about this market? So let me give you an example as to how I would analyze a market, some sort of an obscure crypto coin. How would I analyze this? So I have this chart up here, and we could take off all indicators. We don't need these momentum things on here. I'm just looking at the chart itself, okay? And obviously I don't have all my indicators on here that are derived from price, so I don't have the full picture of what's going on. But this particular symbol is easier to answer the question. And the reason is because there's not enough price history. So that's the first thing I told them when they asked me, what do you think of this crypto? It's been pumping up for maybe a couple of weeks now. What do I think about it? Well, I look back on the chart and I see, well, there's not enough price history. We're coming into zones where there hasn't been enough price history to really, how my system would categorize historical supply-demand areas to do business, there would not be enough price history for me to generate those zones. So for me, I would not trade this market using my system. Now, if there would be any particular levels that I think would matter, and I told this exactly to the person, it would be prior day levels. Prior day levels. So what that means is prior day open, prior day close, based on US time, so 9:30 in the morning Eastern, 4 p.m. Eastern close. And I know some of you guys are going to say it's crypto trades 24 hours, but those times, those specific times are the times where traders are most active. So you have to consider this. And this ties into what I was saying earlier about the fact that you can't just trade using one indicator. You have to consider multiple things. So when I'm talking about time of the day here, you have to consider the open of the US session. A lot of traders are looking at their screens. Potentially the open of the Europe market. So that would be 3 a.m. Eastern. Most of you guys, I'm sleeping at that time. Personally, I'm not that insane. But there have been times where I traded at that time. Never did pretty well at that time, to be honest. So 9:30 in the morning, obviously. 11:30 a.m. is the time where the London markets close. So that sometimes has significance to it. You have obviously your close of the market, and if you're trading futures, you have your futures close time and your futures open time. And sometimes there's other levels after hours. But if there would be levels that have more significance, it would be 9:30, it'd be 9:30 a.m. and 4 p.m. Eastern. And also there's a secret level called the midnight price that I find has a lot of significance. So midnight Eastern US time. So I would take a chart like this. I would go on the chart and I would say, where did the market open at 9:30 a.m. Eastern? And I would mark that. And where did it close at 4 p.m.? And I would mark that too. And I have a study that does that in Sierra Chart, if you guys don't know, that marks prior day levels. So that's what kind of creates all those crazy lines on the chart. So this PD over here, all these extra lines that get drawn are the prior day open and close and midnight price levels that sometimes have significance. I can't tell you enough times. You guys just have to believe me. I know it's a trust me bro type of scenario, but you have to look at the charts to see this for yourself. The prior day midnight price, it doesn't have to be prior day, it could be 2 days ago, 3 days ago price from midnight, US Open session. So midnight Eastern time, that's what I'm talking about. I can't tell you how many times I've seen the market come up to the midnight price and within my volatility range up and down from the midnight price, because remember, it's not just one price, it's a range. And that area acts as a pivot point. You can even see it here. Obviously, hindsight's 2020, but 59.2975. This purple line here is midnight price for May 28. You could see multiple areas, multiple times where, I wouldn't say here, but you could see we had a nice tick of it right there on the 29th. And you could see here on the on Friday, you can also see that that area had some significance on the upside. If you obviously extended it past a few ticks or so, a few points, I would say, based on volatility. So midnight price is important. So when a market has no historical price levels, where's my trading view that I just had open there? It's right here. All you pretty much have to work with is prior day levels, in my opinion, and the overall sentiment of that marketplace. If you have fundamentals behind it or if you have insider information, which is something else. Yeah, there was something I wanted to talk about later that I'll get into. We have 60 people watching. That's quite a lot. Thank you for joining, guys. Remember to leave a like on the stream. Thank you. Thank you. Let's go. So I'm reading the comments here on my phone. He says, Raphael says, I agree. I'll just say hello. What's going on, Mark? What's going on, Hardest? What's going on, Deep Story? What's going on, Monkey Investor? What's going on, Prince of Nothing? What's going on, Dr. M? I like that name, Prince of Nothing. It's kind of, it's a humble name. It's a good name. It's kind of like your name, Prince of Nothing. What it says to me is you're kind of letting the world decide what you're the prince of instead of declaring yourself as the prince of something. And I find that that's how the world really works. Unless you're using the Andrew Tate method, which is the opposite, which is where you proclaim to the world that I am this and I do this. which is the opposite method, which is kind of funny, anyways. But yeah, if you guys want me to expand on that, I could. So Mark said, when you are fading, what are your stop loss from the level? That's a great question. So let me give him an example. We could use many different examples. So like I just finished saying to you guys, I'm more of a fade trader. So what I often do is I have a zone or an area that I'm willing to work with. And what I'm often looking for is the market to make a quick move into that zone. And I'll extend the zone using my extension range, which uses, like I said earlier, it's a mixture of an average true range, a standard deviation, and I'm kind of doing a few calculations on that to get the output of the model. And then using that output of the model, I use that and I draw that as an extension away from some of these key levels that I generate on a larger time frame. So I might have, let me see here. Let me see, just as an example, if I come over here on this 15-minute chart. So let's say we go and we do 29.75 on S&P 500 futures, right? 59.29.75. So I'll come over to my intraday chart and I'll come over to 59.29.75 and I'll press a button and it'll draw my extension line right there. So 59.29.75, it'll give me various extension levels up and down. Now, I don't have to go over exactly what these are, but these levels are basically derived from what my model considers to be the expected amount of movement in the market right now. Obviously, it's never going to be perfect because there could be outlier events. There could be other things you need to consider. But overall, it's a model that I've been testing using different things like true range, average true range. How often does the market fall outside of a certain range? And on average, it's how often is it staying within a certain range? And it's just, it's a theoretical model that doesn't account for outlier events because no model will account for those unless you're some sort of a math genius that can do that. So basically what I would do is I would take a level like this and I would draw an extension and then I would kind of use the upper bout or the lower bout as my range bounds for that. Now it doesn't mean that I'm going to put my stop loss right at the end of the range. I might put it way further out for the moment. And then what I'll do is, as I'm entering the trade, I rarely enter with full size. That's one thing. I'll put on a bit of a feeler, and then I'll be willing to add a little bit more, because what you'll see is, let's say I'm looking for a fade, and I know right now I'm just creating a hypothetical scenario, and it would be better if I showed you a video of me trading from earlier this week, because I was doing exactly this on Wednesday morning. I was fading the market as it was going down, and eventually I was in the money, and I had the trade working for me almost all afternoon. So that's kind of how I would do it. So I would draw an extension like this, and I'd be fading it as I'd come down. And what you'll often see is the market will maybe test one of the extension lines, but not the other. So what I'll often do is I'll put orders, and I'll just make sure trade simulation mode is on here so we don't put any live orders in. But I will put in multiple orders. So I might put in, I might put in one order here, one order here, one order here, one order here, and I'll kind of put them in the general area because I don't know which one's going to get filled. I have a belief about the market that it's very rare that you'll have to the tick prices for price movements. There's a lot of variance. There's a lot of volatility. You can have stop runs. You can have extensions past a certain level. So you have to be ready to accept or position yourself for that kind of variance that you might see, that might stop out, that will most probably stop out the average trader. And just remember, everything I'm saying here to you guys is based on my knowledge of things, and you guys just have to kind of use this information to see if it kind of clicks for your trading. I'm not like preaching that this is the #1 way of doing things. This is just the way that I see things. So the way I see things is, it's very rare you're going to get a to the tick price movement. And just quickly, when you do get a to the tick price movement, that's actually a trade setup that I've been trading for a while that has quite an interesting win rate, which is if you have a key level like a midnight price, like 59, 20, 29, and 75, if you get a perfect top tick or bottom tick of the level and it reverses, normally that's a trade setup right away. Normally that sets up an instant trade, an instant reversal trade. So like let's say the market's moving up and you get a perfect top tick of 29.75. Again, you guys can look at this just to see it for yourself when the market's trading. If it reverses right off the level, you'll often always see the algos front run that, and then the market starts getting offered down or bid up in the other case. And sometimes that presents a good trading scenario. And if you're fast enough to act, because you can actually get that, sometimes you can catch them, it sets up a trading scenario where you can just stop out if it reclaims it, especially if it's a big level. And we saw that. Here, let me put my money where my mouth is and show you this, because we literally saw exactly that on Tuesday morning on the S&P 500 futures. Let me show you exactly what that, look at this. Tuesday morning, this is the 9:15 15-minute bar, okay? The top tick of that bar was 5,900 and a quarter, okay? That level, whatever it has significance because it's drawn based on my supply-demand system, and it comes from a monthly chart. So we had a top tick of that level Tuesday morning, and then the market reversed down. But the way it reversed down was in a very counterintuitive way, in a way that most traders would have just been so gut-wrenching to stay in a short trade for that. And you also had to have guts shorting it there, because that trade, this top tick happened before the market opened. So you had to have been shorting it before the market opened, anticipating that when the market opened, it would not go up and trade past this. And if it would trade past it, you would probably get out and reposition. And what we saw in this case is that when the market reversed and then came back, when it went through and didn't look back. And I've seen this type of trade play out so many times, where you have a top tick of an important level like a midnight price or a big daily chart or weekly chart supply demand level. You have a top tick, the market reverses, but when the market finally comes back to that level, when it reclaims it, it sets up a momentum-based trade where you just buy it and expect the market to continue and not reverse. And so I know I'm going on like a million tangents here, but I'm just kind of explaining to you certain concepts and stuff that I use in my trading. So the guy asked the question about where do you place your stop loss when you're fading the market? Basically outside the extension ranges of whatever level I'm categorizing. I gave him the long answer and then I gave him the short answer. Hi, what's your opinion on price action versus order flow? And one thing I also forgot to say, I mean, I'm giving you guys too many. I'm not gonna say it. It's too many things I'm giving out. But you know what? Actually, I don't really believe that giving out information like this is means anything, because at the end of the day, you guys out there still have to put your money where your mouth is. You guys out there still have to place your own trades. So you could have all of the profitable trading knowledge. You could sit down with Stanley Druckenmiller, with every single of the biggest profitable traders in the world. You can sit next to them, but nothing means you're going to be able to make money trading after that. Even after 6 months of shadowing them, nothing means that you're going to be profitable just because you have the knowledge. It doesn't mean that. Why do I think that? I think because it's kind of a deep reason. The reason I think that is because you being able to take money out of the markets doesn't only rely on your knowledge of the markets. It doesn't only rely on your strategy. It relies on your overall necessity and reasoning behind why you need to make money taking out of the markets. Because if you believe at the deepest root of your core that you need to win, that you need to make money, like you show up today and you just have a genuine need, whatever that reason is, you might have to pay your car, you might have to feed your family, you might have to do something. If you have enough of that genuine drive to pull money out of the markets, you're going to end up doing it no matter if you're talking to Stanley Druckenmiller or not. You're going to end up doing it. You're going to end up finding your own pathway. That's my argument. That's my reasoning behind this. So you could have all the knowledge in the world. If all you think about is money and you don't have a reason for the money, like if you're just saying, okay, I want to make $1 million, but what do you really need the million for? If you don't have a reason to use the million, you're not going to be convinced at the deepest root of your subconscious that you actually need to make that million from the market. And that alone is going to be the reason why you don't make the million. So that's kind of how I see things. But let me know if you guys want to challenge me on that. It'd be interested. Let's see here. Deep Story says, how about the market structure indicator? Is any way to get access to that? I'm not sure. I'm not sure exactly which indicator he's talking about. Monkey Investor says, Chris, do you use option open interest info and volume info to support your day trading decisions? So no, I don't use open interest and option volume, although I think it would be an interesting study tool. Like, I've always found options so fascinating, but to be able to really put all that data into a way where I think it could be tested upon, doing tests to see what works, what doesn't, it just requires so much work. You need to have like you need to really dedicate yourself fully to that, to performing a study on the open interest data for the options. But I'm sure that there's actionable information there. I mean, the way I see it is, I mean, you have this infinite source of data, right? This infinite ocean full of information. Call it the financial markets. You have options data, futures data, open interest, price action, levels you might categorize based on larger time frames, how much is the market moving, whatever systems you want to create. You can find an edge in anything you can find an edge in. That's what I'm trying to say. I mean, you could find an edge using open interest, but it still doesn't mean you'll be able to trade and make money doing it. You know, that's a different part of it. So taking your indicators and your knowledge and then converting that into doubling your account or 10xing your account in a trade, how that happens is what traders need to be interested in, not all the technical stuff about how to actually do the trading. Yeah. Because how that happens, doubling your account, tripling your account, going on a big run, or you know, some of the typical cycles that might happen, you might be on a good run and then you lose it all. All of that is normal. All of that's so normal. It happened to me this week. That might even be the motivating factor behind this live stream, and I may not know it. Prince of Nothing says, down 40K this week, man. It's been rough. Funny thing is, if I scalped instead of holding for bigger RR, I wouldn't have been in a drawdown. Instead, I might have been up. ES, talk about ES more, bro. Yeah, man. Well, look, the 40K is relative to you, so I don't know if that's a lot or not. But I mean, obviously, nobody likes to lose money. But I guess we could talk a bit about losing money. I mean, we got a few comments here. Thank you guys for joining. Welcome, Roger. Welcome, Media Consumer. Deep Clip Zero. Welcome. Thank you for joining. IRL 49. What's going on? Hello from Ireland. What's going on, Dr. M? Wait for me to play guitar. Be there in 5 minutes. Right on, bro. we got two guitars right here. I just put the strings on, so it's gonna be out of tune. Yeah. And let's see. Yeah, let's talk a bit about losing money, because some of you guys are under the impression that you can trade profitably and never lose money. Couldn't be further from the truth, guys. Couldn't be further from the truth, my friend. In fact, I'm gonna go ahead and say, and I really genuinely can't believe we have 68 people watching, 70 people. I mean, just thanks for joining, guys. Appreciate you guys joining this. I'm going to go ahead and say that losing money is probably, without exception, the most motivating thing that can happen to you as a trader. I mean, there was another guy I was watching that talked about this. He calls it forced meditation, which is basically what the market does to you when it kicks your ass, when it destroys you. I was forced into meditation this week on Wednesday, and I can explain to you how that happened. It basically, when you get absolutely ruined by a market, and it doesn't have to mean blowing an account. Doesn't matter if your account goes to zero. It doesn't matter if you blew a prop firm. All that matters is the market defeated you in one way or another. You may have been on a good run, and then bang, the market just destroyed you. What happened there? That's the interesting stuff. That's so interesting that's what happens there. And so when I hear people use this language, and this always comes from newer investors that are only like a year or two into this. When I hear investors use this language that they think that they could get by with only minimal losses, always in the back of my head, I don't want to say it to them because it's kind of the harsh truth, but it's like in the back of my head, I'm like, yeah, this guy's gonna learn the hard way, because it's the losses that basically teach you everything you need to know. So let me give you an example. So Prince of Nothing says he was down 40K, and then he thinks that he could have done better if he didn't try to always hold for a bigger RR. That becomes harder to quantify, because now you need to develop a system that can give you a reasonable indicator as to if you should be holding or if you should be scalping. And that's not always easy to determine. What I think that means is that you need to maybe consider working on your skill set in regards to scalping and in regards to holding long term, because that's two different skill sets. That's two different tools that you might pull out of your toolbox. And I like the way Fat Cat does this. Fat Cat's another YouTuber, trader that I've been following for quite a while, and he's talked about this a lot in his videos, where he switches around his approach. Sometimes he'll be scalping for a few ticks because that's what he's seeing, that's what the market's offering, and then other times he might switch that over to an approach where he's holding for longer moves. So it's a different skill set, and I think that you have to, as an investor trader, you can't just be a one-trick pony, because you can't make money being a one-trick pony. You just can't. I'm trying to think of an analogy, but it's just like, for me, it's just common sense. I mean, people are going to figure you out. The books are going to figure you out after some point. You could sit there. It's like, for example, like I'm a musician. If I go to the gig and I have a regular gig and I always play the same songs, it'll work for about a week, 2 weeks, maybe even a month if I push it. But after a while, the people working there are going to hate my guts. They're just going to associate me with doing that one thing that I always do. And then they're going to be tired of it. I'm going to be tired of it. And then because we're all tired of it, the results are going to be down because we're not interested in it anymore. And then it's just not going to be good anymore. So you have to constantly shift. In regards to the markets, you may have a trading strategy that's working, that's doing well for you, and it could be working in a certain environment. And by all means, milk it for all it's worth. And that, it goes into that part of where I was talking about, converting your trading skills into actual hard, cold results, that's the hard part. Because the point from where you realize your strategy is working to where you convert it into dollars, that's sort of the psychology aspect right there. That's where you need to have that grit to show up and just put the trade on. Maybe, put a lot more risk than you think you should put on. Convince yourself that you need to be risking more on the trade, as opposed to all these trading Twitter influencers that say risk 1% per trade, risk 0.5% of your account and you'll never blow an account, or you should always have a 2.1 RR. All that crap is so subjective bullshit, doesn't make any sense, and it's not relative to your trading approach. But yeah, man, I could go on about this stuff for like so long. It's crazy. But yeah, you definitely need more tools in your tool belt. Let's see here. Deep Clip Zero says, when the market is trending sideways from a big up or down move, how do you decide what price to get back in or anticipate the next move? I mean, that's too subjective. It really depends on how it's too subjective. You can't just, that's what I mean. Like most traders, you can't, I don't want to sound, pretentious or anything, but most traders, you're looking at this. You're looking at a chart with a VWAP, a moving average or something like that, and you're saying, okay, the market's trending up, or okay, the market reversed, and now where do I get in? Like, you don't know where to get in. The way I see things is, if the market is coming down and it's reversing, chances are my system would have already got me in before it even reversed, because I would have been anticipating for it to reverse before it reversed. And I would have been stopping out if it was going more than I anticipated, based on how my system works for that. And some of you guys would say, well, you'd be trying to catch a falling knife. And the reality is, well, most of the time, yes, I am catching a falling knife. Either it's to the upside or the downside. And I don't know what to say, but it works. It works. And there's factors that play into this. Like I won't be fading the market if there's nothing to fade it off of. That's called suicide. That's called trying to catch a falling knife. Like for example, if we go, if the market's making fresh highs, right? NASDAQ, let's say this is NASDAQ. You guys can see my screen, right? Let's say the market's making fresh highs, new all-time high. I'm not going to be fading all-time highs. I'm not going to be shorting all-time highs because I have nothing to short it off of. I have nothing to fade it off of. There's no key areas. There's no context. There's no areas where you're going to probably see other market makers come in and do some two-way action. There's nothing to fade it off of. So my whole thing is, if you're going to fade the market, make sure you have an area to fade it off of. Something reasonable, something workable, something you've tested, something you've seen time and time again, something where you're likely to see some two-way action. So I'm sorry, Deep Clips, I didn't answer your question, but I guess we don't see the market the same way. Media Consumer says, hey man, long time watch, your first time commenter. I'm actually driving to Niagara Falls now and have you on his live. Phil Canadian here from Toronto, fellow Canadian, keep up the good work. Media Consumer, appreciate you, man, thanks. Roger says, greetings from Asia, thanks for joining, appreciate you guys. Leave a like on the stream if you just got here. What is going on? Deep Story says, I mean the indicator that is always on your screen, those lines green and red. Green and red, green and red. Sorry, I'm pressing the wrong key here. Is it this one? Is it these? Is it these? I don't know. I don't know. Let's see here. Love your videos, man. Good to catch your live stream right on. Sharpnell89, thanks for joining. You don't learn without losing. Absolutely true, Raphael. I don't understand people when they think that they can get by in any industry without losing. It's like, it just doesn't make sense. It doesn't make sense. It's hopes and dreams. You're not a machine, guys. You're not a machine. And you're not operating in an environment where there's a fixed set of outcomes. Like, if you run a casino, most of the time you're going to win blackjack just because of the way it's going, and the casino sets rules so that they don't lose. So the only way that they could lose is if they do get an outlier event and someone comes in and plays 3 tables at once and cleans them out on all 3 at the same time because they know how to count cards. But the majority of the time, that's not going to happen. So they can rely on that model where small win, small win, small win all day. They're just printing a bit of money every day and they're making money slowly, slowly, slowly. But I personally don't believe that that model works for day trading. And I know this is a little bit controversial because some of you guys are going to say, well, what about all these traders I follow that have these consistently uptrending account curves? Well, maybe that works for you. Maybe that works for you. But it's never worked for me. It has never worked for me. My equity curve always looks the same. It's always many trades sideways, and then I might be sideways or sideways slightly up. Actually, lately that's what it's been. It's been sideways slightly up. And then every now and then you get that trade that just shoots it up because you get that outlier move. And you need to learn how to position yourself for those moves. I believe every trade you take, you should always leave a runner on because you don't know how far it's going to go. That one runner that you put on will probably make up for your whole week, sometimes your whole month. And I've seen it. It's happened to me so many times. Can't explain why. That's just how it works. You have to be willing to bet big on your best trades and also hold them. Hold them to target. And it's not easy. It's part of it. I'm absolutely so dehydrated. One sec. Let's see here. We got a number of questions, but let me see. Okay. So if you guys are down, I will open up the floor for some questions. If you guys come into the Telegram group, I put the Telegram right there. I'm streaming on Telegram as well. If you guys want to talk on Telegram, come right in. Ask me a question live on the stream. All right. I will wait for you guys to join, but until then, I will look at the comments and right over here. Let's see here. Hello from Poland. What's going on, Tom? Thanks for joining. They say Fortnite Goat. What's going on? He says they say a 65% win rate. You are doing excellent. It all depends. It all depends. It all depends on the type of trading you're doing. So if I take a trade and let's say I buy it here, my stop is here, my target's here. The closer your target is from your entry, logically speaking, the higher your win rate is going to be, but the lower your profit is going to be. So it's always a game of balance. So if you have a high win rate strategy, you need to be making sure that the profit you're making is enough for the stops you're taking when it's losing. And I would go as far as to say that the shorter your targets are, the shorter your stops have to be too, in order for you to make it work. So if I'm kind of campaigning myself into a trade, into a fade trade, into a particular zone, if I have one area, well, I always judge based on what the market's doing now. If I think it's just doing a lot of back and forth, I'm probably going to scalp off a piece of it and then add back more as it goes back up. So like, let's say I was fading it from this area, I will be fading it here, and then I might see it come down depending on how far it goes. I'm going to have one juicy target down there, but I may have 2 or 3 spots where I'm going to scale out a piece of it because I don't know what the market's going to do when it gets down there, depending on the level of overall confidence I have in the trade. So there may be scenarios where I'm just going to be gunning for the big trade, just because I think there's other factors in play that might be signaling that the trade might be bigger than I think. And so the way I view a trade is as a constantly unfolding scenario. So like, let's say I'm in that trade, and then now we're coming down to an area where I don't know if the market's going to bounce or if it's going to go straight through, but I think that I have good reason to think that if it does go straight through, it might continue. That's a scenario where now your trade is like this evolving mechanism, this evolving being, where I may decide based on if I'm up or down in the day, if I need to cash flow or not. I may decide to scale out a piece right there. But if I'm really like, if I have more degree of confidence and if I have less of a care about cash flowing the trade, and I think that the trade has the potential to be that trade that really runs based on whatever criteria I'm working with, that's a scenario where I'm not going to take the partial there, and I'll give it more breathing room. So it's like, I imagine like this meter in my head of like, on one side, it's like I'm leaning more toward taking a partial faster, and on the other side, I'm leaning more towards just let the bitch ride. Let the thing ride and see how far it can go. If it comes back, doesn't matter. And if it goes, we have the potential to have a really big trade. Because I know at the back of my mind that it's those trades, those big trades that end up being big trades, while I'm not gunning for them all the time. Most of the time, I'm not gunning for them. If you end up in a trade like that, those trades are the ones that exponentially grow your equity curve. Those are the account growing trades. That's where the money is made. Where you have a position on it, it just so happens that, oh, I'm up 10x on the trade opposed to where I was originally placing my stop loss. Okay, now I have something to work with. Anyways, it's all theoretical stuff. And before I end the stream, I want to talk about the loss I had on Wednesday, because that was pretty big. Johnny says, why not move up your stop and never let good green go red? It's not necessarily that I would let a trade go. I don't really know what he's referring to, but I rarely move stops. Rarely. What I mean is I rarely trail stops. But based on what happened to me Wednesday, I was a little too loose with that. Because I got caught in a big sweep right around, right before, I think it was right before 3 p.m. Eastern on Wednesday. There was a big sweep that caught me really bad. And in that case, if I had my stops a little closer, it would have saved me. But yeah, got caught on that one. My problem is that Thursday I have got I'm reading some comments now. Prince of Nothing. Let me see. Did anyone join the Telegram? One sec. Nobody joined yet. Nobody wants to ask questions. It's all good. My Prince of Nothing. My problem is that Thursday I got out of my massive drawdown up 17K on the session. Then I lost it all. I think my problem is I trade my P&L too much. Do you know someone called Fang Yuan? He would be the perfect adapter. His resolve is insane. No, I got to check him out though. Well, look, Prince of Nothing. First of all, I appreciate the fact that you're sharing all this here, because this is really good. This is good stuff. So you got out of that drawdown probably due to what myself and other trading people would call, or gambling oriented people would call, the springboard effect, which is like when you're in a drawdown in the account, it's almost as if you can't do anything but get out of it. It's like something that happens to your psychology that you just can't, you just have to get out of the drawdown. So you just, whatever happens, you just go to any means necessary to just get out of that drawdown. So you just start making money. And then when you finally get out of the drawdown, now the springboard is back to where it was in the center. So you don't have that same level of drive that you had to get out of the drawdown. You understand what I'm saying? So that's when you're starting to be on the wishy-washy spectrum again. So that's why I think, again, this is just for me personally speaking, you always have to have, every session you come to the market to trade, you have to have an underlying reason as to why you need to take money out of the market right now, that day. Because with that underlying drive that you have, that underlying reason, and again, for you, it might be a different reason than for me, whatever it is, but normally it's a reason why you need to take money out of the market. You need to make money. If you don't have that in place, that's very dangerous. It's beyond the money. It's beyond the money. It's not just, oh, I need an extra 10,000. Oh, I need an extra 20,000. No, you don't. No, you don't. You don't need an extra 20,000 unless you can convince yourself that you do. Why do you need that extra 20,000? Like, you have to literally psych yourself into the fact that you absolutely need to triple this account and there's nothing else that can happen. You absolutely must triple this account. You must 10x the account. Because when you get yourself into that frame of mind, now when you look at the market, you're seeing it differently. You're saying, well, there's nothing here today that can make me any money. I'm not going to triple this account today, so why am I even going to bother? I'm just going to be sitting around here doing small win, small loss, small win, small loss. So because of that, you may decide not to trade. Whereas somebody who doesn't have that underlying fire about the fact that they absolutely need to make 2,000 because their life depends on it, they're going to actually sit there and just go back and forth and just chop themselves to death, and then nothing happens. And then at the end of the day, they're going to be like, why the hell did I waste my time sitting here? You know? So that's kind of part of the psychological aspect of how I see things. My problem is that Thursday I got out of my massive draw. Okay, yeah, I read that. Let me continue reading. Swami S says, "Hi Chris, thanks for the time you helped me with Sierra. Have you come across Pax? I've heard of Pax, but I've never studied him. He trades 30-second open range and he's very interesting. Levels execution is unlike anyone else I've seen." Swami SI. Well, you know, Swami, I mean, any serious trader like is gonna have somewhat of an unorthodox way of trading, and you're always going to look at it and be like, whoa, that's kind of weird. Like, why do they do it that way? I wouldn't have thought about doing it that way. Because serious traders, they put in the screen time, and it's kind of like a you versus you thing. It's not you versus Twitter following what these other people are doing and then making money using their strategy. No, it's you versus you. So, you know, it's normal to develop an unorthodox way of trading. Let's go full cam for a second while we answer some comments here. You spoke of Fat Cat. Do you know Axia Futures based in London? I've heard of them. Yeah, I've heard of them. Swami says he's not affiliated. Multiple 7 to 6 figure live trades on YouTube. Okay, interesting. Long answers. Yeah, but the thing about the 7-6 figure, yeah, I mean, it's all cool. It's all fine and dandy when somebody posts a 7-figure trade or 6-figure trade. It's all fine and dandy. It's all cool. It's all flashy and everything. Everybody's flipping out about that stuff. But what I really, really appreciate is when traders sit down and they break down the psychology behind their trades, behind everything behind that. And even going into certain things that could be considered personal too. Because in my opinion, those are the things that really drive your trading. It's not only the strategy. That's kind of what I've been trying to hammer home here. It's not only the strategy that makes you a winning trader. It's everything. It's everything put together. I saw a tweet not long ago about a guy saying, if your personal life is not in order, then your trading is not going to be in order either. And I personally think that could not be further from the truth. I think that that is dead wrong. I personally think that it's under times of stress where you're not actually sure if you're going to be able to survive the next month or 2 months. Those are the moments where you're more likely to have your big trades and your big breakthrough events because you're under a higher degree of pressure. So I would go as far as to say is that when your life is in absolute shambles, I don't want to say shambles, but I want to say when you're under a higher degree of pressure to get things done, those are the moments where all of a sudden it seems that your trading just starts to click. At least that's happened to me because I like to experiment with upping my cost of living and making kind of like playing the game on hard mode a bit. And I found that when I do that, it's like all of a sudden I get into these, I go on a run basically. And I'm trying to do this more to when I go on more runs. And so I, do what I'm trying to do basically. But yeah, let's see. Long answers on bookmap, DOM, footprint, RSI, and delta indicators. I don't know, I might skip that one for the moment. Joseph here, what's up, bud? You got to have a max loss with your broker. If not, you'll give it back 2 weeks gain. You'll give it back 2 weeks in 1 day. Iskander, he's trying to, are you trying to join Iskander? He's trying to speak on the mic. Let me see if he wants to get up. I saw him join, but he keeps disconnecting. Let's see here. My back hurts. Well, Joseph says, you got to have a max loss with your broker. If not, you give it back 2 weeks gain in 1 day. Just me. I don't know. I don't know if I agree with that. I don't know if I agree with that, because if you really have a true underlying reason as to why you need that money, you're not going to give it back. If you're in a scenario where you don't need the money, then you're more likely to give it back. That's what I'm trying to hammer home here. If you want to make big money, you should rarely move your stop. D-Tex, that's an interesting take, yeah. I mean, I agree. Most of the time when you're going for a big move, and when, well, I'm gonna say it like this. If you have conviction in your trade, there's no reason why you should move your stop. Because there will be events that potentially test your break even, potentially test. There's always going to be those back and forth moves. It's always going to be counterintuitive. I remembered countless times where I'm in a trade, I'm in a short trade, and my stop is not getting moved. I know exactly what my underlying criteria is. I do not care if the trade comes back. I have conviction in this trade. It can come back to my break even 100 times, obviously within the time of the market, right? Because I'm just saying 100 times as a random number, but it could come to my break even as long as the market's not closed. And I will stay in that trade. I will hold with utmost conviction until I see the criteria that is telling me that, hey buddy, your trade is probably not going to work right now. You should probably think about trimming this, cutting this, repositioning, just throw in the towel for the moment, come back tomorrow, it's not working, just give it up. Just give it up. Or come back in a few minutes or whatever, just reposition. That underlying utmost level of conviction is what you need. And new traders do not have that. They're paper hands. Was that when the tariff news came out? No, I don't think so. Let's see. Thanks for all the comments, guys. I appreciate it. What's going on, Emil? Thanks for joining, man. He says, thanks for sharing your thought process. Sometimes we have that aha moment where you realize or are prompted by that little detail of the trading process that would be useful. I also very much agree how sobering it is to lose. I quickly fill you in on how important discipline is. At the same time, aggression is needed. I like that, 100%. 100%. I would say, I mean, I don't want to generalize here, but I mean, we're probably all dudes watching this. We're 61 people. Probably there's like, I'd be surprised if there's even one woman watching this, but I'm going to go ahead and say that your power as a male stems from your ability to get angry and your sex drive, like how horny you are. If you get angry at certain things, what makes you angry, that's where change starts to happen. You have to get angry about certain things. If you don't get angry, you're never going to make a change. Nothing's going to ever happen if you don't get angry. And I don't mean, I mean, some people do anger differently. I mean, I have a friend who, if you go to his house, he's got holes in his walls because he's kind of an MMA fighter, but let's just say he has some anger issues. But I mean, he's doing well for himself at the moment, so good for him. But yeah, man, I totally subscribe to that idea about anger is definitely one of our driving forces as the male species. I may have made a video about this like way back. I may have said, part of me thinks females actually might be better traders simply because they're less, what was I trying to reason? They're less what? They're less impulsive? No, they're way more impulsive. Females are way more impulsive than men. I mean, just get a girlfriend and you'll see what I mean by that. I don't know if men are better traders than women. All I know is that trading is mostly male dominated. But anyways, we'll stop the sexist talk now. Not that it matters because most of you guys are all guys anyways. My back hurts. Chris, you are awesome. I got to run. Thanks, bro. Have a good week. You too, bro. Have a good week. Thanks, bro. Fortnite Goat says, can you import free screeners from the web onto interactive brokers instead of paying a fee to use theirs? Free screeners. Well, interactive brokers has screeners. I don't think you need to pay for using their screeners. But I don't, well, what you could do is you'd have to, no, you can't import lists of stocks into a watch list unless you use their API somehow. No. What I would say is use whatever screener you're using, create the API, create the watch list using the screener and then use that watch list and do that. Ellis Kander, do you want to speak? You're in the Telegram here. Let me unmute you. Allow to speak. Oh, he left. He was scared. Paper hands. Oh, he's back again. He's back again. I'm going to allow you to speak, bro. Oh. How come it's... Oh, you're allowed to speak. You should be allowed to speak. All you have to do is unmute your mic. Let's see. Gregory... Yes, you can go ahead and speak anytime. I'm waiting for you, bro. If not, I'm going to answer Gregory's question about prop firms. I mean, Gregory Bergman, welcome. He said, do you use prop firms, Chris? Did you ever try them? Once, not more than that. No, I've never tried a prop firm more than once. I know people are really big on these. There's a whole community around them. I've never been really into those prop firm trading. I've always been one to just go in and trade my own money. I may have done a video or two explaining, like diving deep into some of the pitfalls that those prop firms have. I know that they have rules and stuff you have to follow, but no, I mean, I don't have enough experience really using them that I can comment on them. Maybe for somebody who doesn't have enough capital to fund an account, maybe a prop firm could be okay. But I think that the rules that they put on you, while maybe some of them might be good to learn trading, I don't really know how these prop firms work. If they may have some rules that could help you to improve your risk management, but at the other end of it, they also might kind of restrict you in ways that doing your own case studies about the market may not. So really at the end of the day, it's up to you to make your own judgment regarding that. What's up, Captain Morgan? You're joining the Telegram. You want to speak? I'm allowing you to speak. You want to talk? You got a question? Captain Morgan. I like that name. Ready? Oh, I wish I knew how to speak like a pirate. Telegram's kind of finicky with their audio devices. How come I don't hear you? Oh, one moment. Wait, say something? I got you, man. I got you.
So thanks for that. Yeah, I didn't have a question or anything in particular. I was just, I had a bad day Wednesday too. So I don't know what was going on Wednesday, but yeah, it was a crap day.
Yeah. Were you trading it early or late?
It was in the RTH about 3 p.m. my time. So what's that? 10 o'clock or so.
10 a.m.
Yeah, Eastern.
Yeah, dude.
Yeah, I just basically went totally against what I meant to do and just got stuck on one side. You know, when you get stuck on this thing's got to go long.
Which which side? You were buying it? You were fading it? You were buying it in the morning on Wednesday? Is that it?
Yeah, I was buying it. Yeah.
Yeah, I was doing that too.
Yeah.
So let me go back on my chart here and we'll look at something. But
basically just at the open, rather than shorting the opening range, in my bias, I don't know about you, but I find it easier to trade equities long. It's just hard to be short. And
equities, Yeah, equities is one thing, but yeah, I was trading the index futures. I was trading the S&P 500 micros on Wednesday, and
Yeah, I was
I
on the minis.
yeah, I was fading the market too, starting from about 954, 950, 951 actually, and then I exited
Right.
for a loss on the first trade, and then I just waited around after that, and then I kept fading it. That's the thing. So I think what I don't know what happened to you exactly, but from the
Yeah,
sound
well,
of it,
basically, yeah, the same thing. I took an early loss, which was it was a reasonable loss, but it was okay. Then I scalped half of it back, and but I rather than going, hang on, no, this is a short market. I stuck to the idea that you know we're going to get it back up above the yearly pivot, and we're long, long, long. But so I
uh,
paid for that.
so what time did you stop out at?
It was all over pretty fast. Probably about I was done by an hour after the open.
Oh, okay, yeah. So okay, so that may be why. I mean, yeah, definitely. I mean, the longs were losing money all morning Wednesday, but I'll kind of give you a perspective of what happened to me Wednesday. So I actually I actually was fading the market all the way down until 11 a.m. and I was actually and then I stayed in the long all day long until I actually got wiped out at 2:51 p.m. by this crazy news announcement. But I was actually up a significant sum on both the S&P and the NASDAQ because I was trading both of those. So I guess what the difference between me and you is in this case I sticked around and I kept my bias because I did have a bias and I did have a reason to be fading it there, and I didn't stop out because the bias was still intact. So where I got messed up Wednesday was later, and I can go into that now. But did you have anything else you wanted to share before I do that? Let's see, where do you go? You hear me? Okay. Anyways, let's go into this. All right. So let's look at Wednesday now. By the way, if you guys are just joining, thanks for joining. I appreciate you guys and all this. Leave a like, all that stuff. So check it out. This is S&P Futures Wednesday. Now, what I think I'm going to do to make this even better is I'm going to go and look at my recording of the market. I'm not going to show you the chart in hindsight. We're going to go look at the recording. So check this out. It would be, well, I got to go through my recordings to find it, but it would have been 28. So let's see here. 28. So it would have been this one, 3.3 gigabytes. Damn right. There it is. All right. So let's full screen this. Okay, let me know if you guys can see that. If you guys can see that. All right, we're going over the recording from Wednesday morning. Just to be clear, what happened to me? I was fading the market. I was buying it as it was going down. I stopped out of one trade for a loss, and then I kept buying it because I had a reason to, okay? But the thing is, my trade didn't play out until the afternoon. And I was doing fine, and then I got wiped out really bad around 3 o'clock or so. So let's have a look at this. So this would have been the open of the market. We have downward momentum. Actually, you know what? You know what I noticed was this. Look at the first minute of the market. I was opening up a trader workstation or something. This is the first minute of the market. And one sec, I just wanted to show it on my screen.
Yeah, I mean, it was just straight short out of the opening range.
Yeah, it was, but if you looked at the first movement, it was actually up. The very first movement of the day was actually up on ES. Like if you look at the first, say, 4 or 5 bars of the day, those are up. So that's actually something I categorize I call it the opening momentum. I don't remember who showed me this, but I found that this works, is that when the momentum, so basically if there's a direction, as soon as the market opens, it's probably smart to not fade it. Probably smart. And normally that's worked out for me. In this case, if you faded it, it would have worked for you, obviously. But this could have been an outlier event too. So what I wanted to show was just the trading session, and I wanted to show like some of the entries. So you saw me, I was getting long over here right around, you see I had a 4-lot position down on at 34. And let me see exactly when I decided to cut that. Actually, what I think happened was, wait. Order filled. Oh, I think what happened was I had a long, this is what happened. I had a long here, and then I got stopped out at 29.75, right on a bottom tick. That was kind of very annoying. And that was actually a mistake on my part, because normally my trading system normally I account for things like that. Like if I have a key level, like 29.75 was a midnight price, I think it was prior day midnight price. If you see a perfect bottom tick of a level and reverse, that's a signal. That was actually a long signal right here. Whether you caught it down here, or whether you caught it up here, obviously if you caught it lower, it improves the risk reward profile of the trade quite significantly, and ideally you would have wanted to catch it lower. But what happened in my case is I made a big mistake. I actually had my stop loss right at the midnight price, and I forgot to account for the fact that we could actually see a perfect bottom tick and a reversal. So what I had to do was just have the stop lower than this. Anyway, so that was that first trade. It's not that important to look at. But then I was starting to get long right over here at 34. And then I want to see exactly what happened. Did I end up taking any off, or did I just not work? And I think what happened was this. I cut one here. I scaled one off because I saw that it wasn't working. So what I was expecting to see it do, you see this range here, 36.25 down to 34.50. That was a range I was categorizing. And I wanted to see a Heikin Ashi close inside the range. And we got 2 closes outside of it. So I'm like, ugh. It's not working out. So I'm starting to cut. I'm scaling out. I scaled out 1. I scaled out another 2. And then I think I just cut the last one. I left 1 on, and then I don't know what I did. Let's see. I probably just cut it. Let's see. Or no, I may have left 1 on. I think what I did was I took off most of it and left the rest of it on. You can see I now have a buy order down here in the lower end of 28. And so I'm starting to scale into this long position here. And some of you guys may not agree with this, which is kind of campaigning into a position. But if we look at the bigger term charts, I want to show that. Let's see if I could find it. So you can see now I have an average at 30.75. I had a buy order down at 28 and something. I'm going to just fast forward through the recording so we could see this. I'm scaling in. Now I'm long, I think, 2 or 3. And I'm willing to add more down at 23. So basically, I was willing to add more as low as 18.25, basically, on this trade. So it's a little crazy. Some of you guys may have found it a little crazy scaling in with that big of a range. But because I'm trading micros, for me it was actually acceptable. For me it was reasonable to do that. You could argue and say that my initial entries up in the 30s could have been stopped out, and then I could have repositioned a little lower. But I don't know if it was going to. I didn't know when it was going to reverse. I mean, what I was really banking on is if we would see some more back and forth around this 29.75 and also around this 26.75. I was betting on that we would see a little bit more back and forth around this area, but we did not. In fact, we got continued down movement all the way down. So I basically said to myself, and I was like, well, look, how far am I really willing to fade this? Do I really want to get stopped out down at 18.25 where there's a monthly level right there? Do I really want to stop out the trade there? The answer was no, because that's a big level. I don't want to stop out there. So I decided that based on this trade, I was going to be willing to fade it as low as 18.25 and the lower end extension of 18.25, which I don't remember exactly what it was. Maybe it'd been 13 or something. So I'll just fast forward through my recording, and I'm long 5 at this point. Let's see, my average was 20.26, and there was one trade. I mean, look at, you could see that trade I had on NASDAQ right there. It was a perfect bottom tick, which obviously I didn't know was going to be a perfect bottom tick, but that trade was a kind of a cash flow type of trade that I was going for. So while I was in this trade down a bit of money, looking for the market to kind of reverse, I had added 2 more down at 23 and 21, obviously with the intent of stopping out if we see lower prices below about 15 and something. So I'm not in a great position, but what I was really looking to do is on any back and forth movement, just scale out some to kind of lower my average price and kind of work around this position. So since I'm in this position and it's not really working in my favor, I basically have a limit to how much I'm going to add. So I'm at about 5 at this point. So I'm kind of pushing the limit here. And I basically wanted to scale out one like in this register. And I think, yeah, there was my profit taker, 29.75. And I don't think I actually ended up getting it. What we ended up getting was a profit taker. Sorry, what we ended up getting was a test of the break even, and then it reversed again. So that was not going as expected. I probably had to be a little bit more aggressive in my scale outs. But look at this trade on the NQ. I want to actually show you another example of how I see things with the volatility ranges. So have a look at this. Let's see. We're going to get it. A sec. Is it here? Here it is. Look, look, look. Okay. So watch this trade, okay? Watch this trade. So the market's trading about 466 or so. I have different levels that I've categorized. So the purple line is the line of the level itself, and the red line is the upmost downward extension of my level, based on how my model categorizes the volatility now. And so what I had in this case was if we had a sweep down to about in this 444 area, 444.75, I was willing to buy some, and I wasn't in any position here on NQ. So this is an example of fading the market. So I'm fading it. As long as we don't see it close below about 37.75, I'm looking to get in. In this case, I had my buy order down at 38.75. It actually ended up getting the fill, and just look at this type of reversal. This type of trade is probably the bread and butter of my trading right here. So we have a quick sweep down, very quick sweep down into what I would categorize as a key area, or an area where I would consider as an inflection point, some area where we would see some back and forth. I get filled on the buy order, and I'm not expecting it to reverse immediately. I don't know if it's going to reverse immediately. In fact, it might go through right away. You can see how far I placed my stop loss, because I'm willing to account for if we get quite a big of a stop run. Even if we get about 5 points below this of a stop run, I'm still willing to accept that, you know. But what I really don't want to see is if we see a Heikin Ashi close below the range. The reason why I use Heikin Ashi is because it smooths out the price action into average bars instead of the actual close price of the bar. So when I'm seeing that the average of the bar is below or above my area, that kind of signals to me that it's either working or it's not. It starts to give me more information. So what happened in this case is you can see the Heikin Ashi close is predicted to close around 454. So the Heikin Ashi close is nowhere down here. So it looks like we're okay. So we got filled here, and we may get more downward movement. I don't know if we will, but in this case, what we got is a quick move back up, and that trade was a good one. It was just a one lot scalp, you know, just a kind of a feeler, obviously. But these types of trades, I would say, are my bread and butter most of the time. Like if you get a sweep move down like that on NQ, and then it comes back up, like that's bread and butter type of scenario. And I'm putting my target right in front of 65.75 because 65.75 is a key area. I don't know if it's going to go all the way up to the level or if it's going to shoot through it, or if it's going to top tick it. And if it top ticks it, it might not fill my order because I'm trading the micros and this is the NQ. So I always put my order a bit in front of areas to front run them basically. So I got fill on that target there. That was a nice one. And you're actually going to see me do it a second time later in the session. So the market came down. I added 2 more on my ES trade. And you can see now I have another buy order down at 1650 to try and aim to lower my price a little bit more. And this is still a valid buy. You can see I have my buy order right down in the lower end of this range here. And I have my stops all below the lower extension. And let's have a look at what exactly I did. Look at this trade. So I ended up getting filled on 1650 there, and my average price is now about 25 on ES, and I ended up scaling out some, so my average price got lowered later in the day. And then I was up a significant amount after the market reversed. But basically what I was looking for is, this is what I was planning for. As we would see this market come down to this lower extension, multiple scenarios that I was playing on, one of them was the fact that we could see a slow grind up reversal for the rest of the session. And that was actually kind of what we got. Once it bottomed out in this register here, we kind of just got a reversal, and it was very slow and choppy, like basically like options chop type of moves. But because I'm trading futures, I'm not losing money on time decay, so that ended up actually being okay for me. Look at this trade on the NQ. This is an example of the market had moved down below the register, but I didn't get the Heikin Ashi close below the register, so I actually decided to long it. So you see we got the close right there. And I also look at the Russell on the right side. 77.7 is also a level on the Russell there. So I put on a quick bet on the NQ that because we didn't get a Heikin Ashi close below our range, or we had tested it and then we closed above, I was anticipating. I like to use the word anticipating because trading is all about anticipating. I'm anticipating that we're not going to have a Heikin Ashi close below 34.25 on NQ. So I decided to put on a long right there to see if we can get a quick fade move back into the register. So just look at how this trade played out. So right now we're 2 minutes and 25 seconds before the Heikin Ashi bar closes. So this is kind of a gutsy bet. I'm anticipating the Heikin Ashi close by 2 minutes and 25 seconds at this point. So I put on the long right there. And I guess the reason why I was doing that is because we saw it come down and then we just didn't have much follow through. And also ES is trading right on 1850. And I'm also anticipating that it's going to close above that 1850 and potentially reverse from there. So much talking, got no voice. So I think that this trade actually ended up working too soon after. This was another nice little long. Let's see how I manage this. So I had a target up at 54. Let's see what I did with this. I think I may have ended up just getting it right here. No, I actually ended up moving up the target for some reason. So basically what I'm playing on is this. In this long trade, let me give it to you. Let me give you guys perspective. I'm in a long trade on NQ, I'm in a long trade on ES. What I'm expecting is the market to reverse in this general area. I don't know how long it's going to take. It might take an hour. But we got time because it's only 11 a.m. here. I'm willing to sit through this for an hour, for 2 hours if I have to. I don't mind. I'm position trading here. So now I'm in this long on NQ. So far the trade is working. What I don't want to see is a close below 34.25 Heikin Ashi bar right there. I don't want to see that. If we see that, I'm like, yep, we're out. We're getting out. But in this case, we don't have that. So my anticipation ended up being correct. The bar closed above the area, and the next bar is predicted to close above it as well, and the market is moving up. And I have my target right at 65.75 right in front of it. Same deal as the first trade. Rinse and repeat type of scenario. You see that? So these two trades on NQ, those are both bread and butter trades for me. They're rinse and repeat type scenarios. I'm cash flowing the fact that I'm sitting in this ES trade over here. So that ended up working for me pretty good. Now, I set up a target on ES to try and cash flow and get out because I'm trying to lower my average price here. I don't want to keep scaling in. I wonder if we ended up getting that 16 and a quarter. I think we did. We ended up getting filled at 16 and something. And yeah, that was also an interesting fill. So what you're seeing is the market kind of try to bottom out around this area. I'm long 7 of them at this point. It's still fine. I mean, it's still that fine. I mean, 7 contracts is not that much for my account size currently. In this case, I'm not over betting. What I have in this case, some of you would call it gambling. It is gambling, but it's also conviction. It's conviction based on what I'm seeing. So we don't have the factors that are saying that my trade is going to be negative. So I'm holding on. I'm sticking to it. I'm sticking to my bias, and I'm willing to add more as long as my bias is true. So I think I ended up getting a scale out here, and let's see. Yep, I scaled out 2, and now my average price is down to 21. So bigger picture, if you look at the trade bigger picture, my average price is now about 59.21, which if you look at the market bigger picture, this is actually not so bad of a price to be long, if the market were to continue reversing from here. So we see more back and forth. Let's see, it did go down one more time, and at this point I was contemplating my trade because you see it's coming down. But as long as we didn't get that close below, and we got a Heikin actually close right on it, and then it seems to have reversed. So long story short, I ended up sticking through this trade, and you can see it slowly started reversing, came back down one more time. We had a giant stop run. This stop run, oh my God, guys. This would have absolutely destroyed most traders in my position right here. This would have absolutely destroyed you guys. But it happened so quickly that I think I was outside smoking at this point. I wasn't even looking at this. But look at this. You saw, look at the contracts. It comes down. You're going to see it sweep down, trade all those prices, and then a second later it'll be reversed back. Look at that. Look at that stop run. If you had a stop anywhere in this area, it would have gotten stopped. I had the stop lower because I was expecting that we could have some stop runs like this, and I was going to stop out the trade manually if we would see my criteria not play out. So a minute later, we're seeing a higher close, and then the market's reversing. What do you expect? And now I'm in the money at this point. So now it's afternoon. It's afternoon. Now I'm in the money on the trade finally. And at this point, I'm like, well, there's my car insurance. You don't want to see my car insurance, guys. I'm doing my car insurance while I'm up money on the trade because I have enough conviction that now I'm up money on the trade. The market's slowing down. I think that the trade has room to play out. I'm giving the trade room to play out. That's why I'm doing my car insurance at the same time. So let's see. It ended up working out. Basically, guys, I was up money all afternoon. Look at this. Look at this. If you had moved your stop loss to break even, you would have gotten taken out right there. Easy. That's why I'm completely against moving stops to break even. So we're up money on this. Look at this scale out right here. Look at this scale out. Perfect, beautiful scale out. 29.75, a key area on the S&P 500 futures. It's midnight price. We get taken out of one right there for a nice profit. And I actually wanted to get a second one off, but couldn't. Within about 2 minutes after, the market was reversing back down, which is okay because I was expecting it to kind of go back and forth again. But we have more downside movement. Now this is where stuff started to get a little shady. And I hope I have enough breath to continue this. My phone only has 6% battery. Let's see here. Guys, we have 50 people watching. I appreciate you guys watching. Leave a like on the video right now. Thank you. If you appreciate me going through this trade. Okay, let me try and make this short and sweet. What did I do wrong here? Look, let me show you exactly what happened first. Let me show you exactly what happened. I started getting into an NQ long trade. I think it was 1 or 2 contracts. Let me see if I got this on this video, or it may have been the other video. Was it here? Hold on, no, it may not have been here. Let me see. 28, yeah, it was in the second video. It was probably right here. Yeah, it was right here. Okay, good, I have it on video too. Always record your screens, guys. Always record your screen when you're day trading. That way you can go over your sessions like this, okay? So Right now, it is 2:31 p.m. Eastern Time, afternoon session. I'm long on NQ. I had a similar sort of trade idea here that I was going for. And I don't think I got out of this one. I think I got a little too gutsy on this one, actually. I think I may have ended up adding, you see, I added a second one there. Now, long story short, what happened was this. The market volatility is contracting a lot to a point where in the moment, I was like not too shook about it. I was like, well, you know, this is fine as long as my trade is still valid. Because I've seen it so many times. I've seen it so many times where I cut a trade, and then if I would have just stuck to my trade and just let it play out, it would have worked. So I typically don't cut trades anymore. Like I need better reasons to cut trades. But after seeing what happened here, I think this may have been a reason to at least consider moving my stops a bit higher. Because I think all through this, I never moved my stops. I think I had my stops way below the low of the day still, which was a little too lenient. In my opinion. So I'm long here on NQ. I'm up a bit of money. And you can see I have quite wide stops, which is basically because I'm not expecting the market to even go down there. So I may have been under anticipating the fact that we could see some downward price movement in this moment. So I may have been a little too confident. What ended up happening is this. Have a look. We'll do short and sweet, and then we'll kind of go over it. So I ended up adding another one. And then we got this crazy sell-off. And when I say crazy, I mean destroyed the low of the day by like 5 points. Look at this. Look at this. Look at this. Look at ES. 08. 05s. Look at that. Within, I want to say 20 seconds, I lost $500. And that basically, and that was, so I went from being up about, let's say 300 on the day, and whatever, don't look at the numbers are not that important. But let's say I was up about 300 on the day. I went from being up about 300 cash to being down 500 cash in the span of 30 seconds or less. Now, what did I learn from this scenario? Well, in the moment, you guys have to hear what I was saying. All I kept saying was, wow, that was so gay. Wow, that was the gayest shit I've ever seen. Wow, that was completely bullshit. I was like, wow, that's such bullshit. This is complete garbage. I was just like, I was angry about it, you know? I was letting my anger sit in because it's normal. You have to be angry. But what's good is that I lost enough money at this point to be like, all right, I'm done. I'm not going to sit here and try and make this money back. You see what I mean? Brian, I'm seeing what you wrote. That fat cat made 10K on that trade on Wednesday. Oh, that's good. So that means I donated $500 to him. That's good. That's good. That's good. In the moment of this, I was extremely, extremely angry. But I lost enough money that I was like, all right, I'm done. So I got up, went for a walk, and thought about what the hell did I under anticipate here? What the hell was I under anticipating? And really all I could take out of this was two things. The first is that my stops, I left them too wide. I had them below the low of the day. There's no reason why I should have had my stops below the low of the day when my average price on ES is about 59.20 and I'm not expecting it to go extension below 18.25. There's no reason at this moment why I had to keep my stops below the low of the day. So that was a mistake. That was the first mistake, that I did not adjust my stops. And I know I said earlier in the video that I don't move stops that much, but this was a scenario where I had to move the stops. I had to tighten them a bit because me having, you know where I had my stops? Bro, I literally had my stop down at freaking 08 or some bullshit like that. Like 08 or 05. Like seriously, that was way too wide. Way too absolutely wide. So there was no reason why I had to have the stops down there. That was the first mistake, okay? Now the second mistake, which I have a little bit of a harder time categorizing this one. Which is that I may have been under anticipating a spike in volatility. And part of that is the fact that there was earnings after the bell, NVIDIA earnings. And I didn't know about it. So I was missing information, and I may have been under anticipating the fact that we see a spike in volatility. Why do I think that? Well, look at what the market was doing prior to this sweep. Most of the time, guys, you only see a sweep this big when the volatility is getting to abnormally low, sketchy levels. We're after 2 p.m. Eastern here. We had movement at 2 p.m., 2:15 p.m. You see we had this move up right on 2 p.m. momentum. I like that. That was good for my trade. I wanted to see a continuation going up and getting into my second profit taker up here. We didn't get it. I didn't get filled on my second profit taker up there. I wanted to be scaling out in this zone and then seeing if I could get the trade right up to 33s and whatever. So I got missed there. That's okay. And then the market comes back down, but that's okay too. We're 2:15 p.m. But then what we see is the volatility contracting going into 2:30 p.m. We see this contracting and this slow grinding up, the slow back and forth. But again, I find it so hard to categorize this. Like, okay, the volatility is contracting, it's getting low, it's getting a little bit sketchy. Like, is the market waiting for something? Am I missing something here? Like, am I staring at a, am I the only one here? It's getting a bit sketchy here. You know what I mean? And I think that I may have been under anticipating that. So that's all. But I'm still kind of a bit lost for words on it, just because I was definitely under anticipating some kind of a spike. And then one funny thing that I saw was I looked at Truth Social and I saw that Trump had tweeted something about Syria at that exact moment that the spike happened. So it may have been something algorithmic that got triggered at that time that triggered it. Anyways, that was the loss that wiped me out on Wednesday. Very, very interesting. And it was crazy because I have to tell you what preceded this. I was on an extremely good run all month of May. All month of May, I was on an extremely good run. I don't want to say I was destroying, I don't want to say I was crushing it, but I was doing very well. I was on a very good run. I don't think I even had a red day. Maybe I had one red day. Anyways, I don't want to be talking out of my ass or anything, but I'm just saying I was on a very good run for at least 3 weeks in May. And then, bang, one trade. Wipes it out. You see what I mean? You see what I mean? Let me go through some of these comments. But this stream is very important. And this loss, actually what I wanted to say was this loss is very important, because after this loss, that's what gave me the drive to sit down that night, Thursday and Friday, and just bang out my model that I was working on finishing. I was making some adjustments to my volatility model, and that was the spark to just go and bang it out, freaking zone in on that and screw what everybody else is telling you. My girlfriend can wait, everybody else can wait, doesn't matter. We gotta bang this out, and that's it, because this is important. Because I was on an extremely good run and I let this crap happen in one trade. It's not gonna shift the course of time, because I know very well that what I'm doing works. So that's it. That's it. Let's read some comments here. First time on your live stream. Thanks for all the great stuff you've shared on YouTube over the years. You have made TBOS so much more understandable. Thank you. Appreciate you, man. IV8PV, welcome. Gregory says, if you look at hyperliquid DEX stats, its overall P&L of all traders, it's so crazy negative. It's crazy how much people lose there and how much the platform wins from it. That's interesting. Soki Real Estate says, anger is one letter short from danger. Well, yes. But that's a complex discussion. We don't have to get into that now. I think in every man-to-man interaction, there's always an underlying thought that there could be danger. There could be, no man wants to get into a fight. And that's why, man-to-man interactions are typically very casual, I don't want to say casual, but very understanding. There's a mutual level of understanding that in any scenario, there could be danger. And we don't want danger. We don't want to fight. So in one way, I don't agree with what you said about anger is one letter short from danger. Anger in the right scenario, sure, fine. Gregory Berman says, trading is crazy male dominated, but there's a few really good female traders. Don't say their names. Don't say their names, please. And I hope they're not YouTube content creators. Females are more emotional. Yes, I'm a woman and watching you. What's up, Perla? Thank you for joining. They got more resilience. What do you think about Lavender's recent Dom video? I don't know. Buenas, Mr. Verrillo. Magnifico video sobre IBKR. Cheers, bro. Pura vida. Good video, Verrillion. Great videos about IBKR. Destructo, yes. Mohit says, okay, I'm just reading. What's up, Mohit? What's up, Destructo? What's up, Jamil? What's up, all you guys? Thanks for joining. Brian McAllister, welcome. He says, are you still on Linux and what distro I'm on? Right now I'm on Fedora 42. It's going very good. I want to figure something out before Windows 10 goes bye-bye. Yeah, I've been on Fedora 42 for maybe about a year on my ThinkPad laptop here. It's been going very well. It's a great programming machine. I run a Windows 11 virtual machine inside of it. I can also run a Mac OS inside it too. Very, very, very solid. Fedora has been very solid. What about having a mental stop versus established stop, especially if one trade where a full candle closes on 5-minute time frame below one stop loss target, would a mental stop allow one to stay in? Yes. Ghost 2025, yes. What I was explaining earlier with one of my trades is it's somewhere between a mental stop and a hard stop because I'm looking for a particular condition to be true. If I see the Heikin Ashi bar close, or if I'm anticipating a Heikin Ashi bar close below or above a certain area of where I'm categorizing my ranges, that's going to give me a signal to either cut my trade or add to my trade or start reducing my trade position. So it's kind of in between a mental stop loss and a hard stop loss, but it's called a conditional stop loss, I guess. That's how I would categorize it. But there are still times where I would use a hard stop loss. I take almost your same position, but with 3 minis, okay? Hey, man, it's good to see you live stream again. Yeah, man, welcome. Intelligent, thanks for joining. Labas, okay. What's up, Nikitos? What's up, Mohit? What's up, Intelligent? What's up, Prince of Nothing? What's up, Dr. M? Fat Cat scalps in the 3-second. 10K trade was only 91 seconds. Wow. Okay. I'm opening up the floor to anybody who wants to chat on Telegram. Enrique, go for it. Enrique, you got something to say? I'll give you 5 seconds. Oh, he doesn't have a mic. Okay, never mind. How about I'm Nobody? You want to say anything? You're unmuted, so you can speak.
You know, I believe, right? If you want to like achieve, like if you want to reach the peak, you have to suppress your emotions or you have to conquer them, you know? Like letting them power you is good and all, but you know, it will work well, and then when it doesn't work, it destroy you. What do you think on that?
There's levels to it. I would say it's not a clear-cut approach. It's different for everybody, let's just say. I think people deal with everybody has different emotional triggers. People get angry for different reasons. You may have past memories that get triggered when you get angry. And for some people, that anger might be positive. For other people, it might be destructive. So that's why I believe there's no clear-cut approach for everybody. You can't just say you have to control your emotions or you have to master your emotions or you have to repress your emotions. I don't think that's necessarily the right thing.
You see, like what I mean is basically, if being emotional benefits you, then yeah, be emotional. Like if your anger will benefit you in the market, then use it as fuel. But as soon as you realize it's not benefiting you anymore, you have to immediately suppress. That's what I'm talking about. I didn't mean to say like emotions are like bad and all, but you have to know when to be relentless and when to back off, when to be emotional and when not to be emotional.
Yeah, 100%.
You know what I mean?
100%, yeah. I agree because, well, the markets are emotional. if you look at the charts, you can read into traders when they're panicking, and when they're taking shots. Basically, it's all visible. It's all there. Markets are emotional. They're run on emotions. But I agree with what you said, because you have to know yourself. You have to know yourself. Like, for example, when I cut it on Wednesday, I mean, I had enough, I guess, brain power to know that, okay, I'm down enough money on the day, and I'm not really willing to put any more shots here. And if I do, I'm just going to probably end up making things worse, because I'll most probably just be, a part of me is just going to be revenge trading this. So it's not going to be worth it for me to sit down here and continue trading, because part of me wants to try and make the money I just lost back. And the other part of me, well, is I'm kind of, I'm borderline on tilt. So that's not a good scenario. You know what I mean?
If you saw like a really good opportunity right after that happened, would you go in or would you not?
I would say no.
Let's say like, no. Why not?
I would say no, because I was already in the trade. My trade was there. I was committed to it. I had held it out to the bitter end, and something happened that I was not expecting to happen. And so basically the market kind of forced me into meditation. Basically, that's the way I see it. It was just based on the context. So I wasn't really like just day trading, taking like little trades. It was one big trade that I was committed to, and the market did something that was kind of outside of my expectation to a degree. And I tend to have pretty wide expectations because I've seen a lot of shit. But it still surprised me. It still, it has yet to fail. I did something that I really wasn't prepared for. So I was forced by the market into a state of meditation. So for that particular scenario, even if the trade would have gone right to my profit right after, and I think it did actually, if you look at what it did eventually do that. I think it traded up to the 33s and something. It would not have been a good scenario for me to continue trading. The reason why I believe that is because when you're trading, it's not something simple that you could just sit down and put the trade on and just do it. Like after you take a big hit like that, you're not the same as before you took the hit. You're now like all kinds of emotions are going on. You're kind of on tilt. You part of you wants to make the money back. And you're no longer in a good state to make proper decisions and to really have that same level of commitment that you would normally have to the trade. You know what I mean?
Yeah, but that's exactly where I disagree with you, because you see, past results aren't indicative of future results. If you can like this is exactly what I was trying to say. If you can let the past be the past, you've already proven to yourself, you know what you're doing, you have your strategy, you're in a way, how do I say it? You're continuously growing. If you let this loss stumble you and miss out on a potential opportunity that could 10x your account, I'd say that's where you need to master emotional suppression, emotional control, full emotional control. Because let's say that happened, right? And you get a nice opportunity right after. You have to take it. You have to take it.
Well, yeah. But the thing is, with that one, there was nothing right after. It was kind of just a spike move, and then the market rebounded, and then it was like, all right, that was bullshit. That was trash. It's like there's nothing I could do. I'm not going to sit there and start trying to make the money back, because I'm already emotionally exhausted. I've been there all day, so it was the end of the day for me. Like, yeah, it was just a reasonable judgment I had to make. Like if it was one trade and I made a mistake early on and there was enough time yet left in the day, then I could make a judgment and say, all right, we're still good. I mean, even if I lost a few hundred, it's not a big issue. We can keep at this, because I know that if you give me about 2 hours or so to cook with the market, there's a good chance I'm making my money back and more. But in that scenario, we're late in the day. I just got clipped big time on something I wasn't expecting, and then it wasn't a good scenario to keep trading. You know what I mean?
Yeah, but that's exactly where I disagree with you, because you see, past results aren't indicative of future results. If you can, like this is exactly what I was trying to say. If you can let the past be the past, you have to take it. You have to take it.
It wasn't just a good scenario to keep trading. You know what I mean?
I have a question. How good do you think you'd be if you used the feeling of wanting to make your money back? If you came and sat down and that kind of strength, it's like intense anger or whatever. If that was your resolve from the beginning to the end of the day, like, do you really think that would benefit you immensely or hinder you if you were always hungry no matter the result? Always hungry, even to the end. Like, you never let any success make you what's the word? Like, make you proud, but never let any failure make you like feel depressed or anything. You suppress those and you're
Uh,
constantly hungry.
I don't know. It's kind of a difficult thing. I mean, it's very subjective. It's very dependent on the person. Because, like I said, everybody kind of feels things differently, experiences things a bit differently. Um, Personally, I don't really. Well, after a while of experience in anything, you kind of become desensitized to things naturally. So you'll become more desensitized to losing and also winning. So it will naturally happen after a while of trading. Um, but I don't necessarily think it'll be better or worse for you to be desensitized to certain things. Um, I think you should still, I mean, what I really think it comes down to is you just have to have a genuine need and desire to do this. And that's going to keep you going through it. Because that's like whether you have a big loss or not, I mean, you're going to feel something. I mean, you're going to lose money, you're going to feel something, you're going to make money, feel something. But what I think is dangerous, especially on the winning side, is complacency. Excuse me. When you
Lazy ambition.
yeah, I call it complacency. Is like when you're on a pretty good run and then you start under anticipating certain things happening,
Uh,
or you start like being a little too overconfident with certain things. Um, when you're early on in your career, this slaps you really fast because it'll slap you back real fast. But I guess later in your career, these things they creep up on you in ways that you wouldn't normally expect. Um, but yeah, it's dependent on the person, man. I think Captain Morgan wanted to say something.
yeah, no, no problem.
Let me allow him to speak. Go for it, man.
Hi, yeah. Um, it's interesting discussion. The point that keeps coming back to me was something you mentioned earlier, which is, and in a way, what you've just been talking about is a little after the fact. So it can be argued either way, whether you've got the mental clarity to take that thing that looks like a good setup. You may not be seeing it clearly because you, like you say, on tilt, but it's all a bit after the fact. What you said about your attitude going into the day vis-a-vis, you know, if you've got to make the money because you've had a drawdown, you're laser focused, you do the job tightly, all goes well, and then you have a day where you're a bit wishy-washy. Maybe in the back of your mind is an aspect of something you're developing in your system or you're trying to size up. That's currently my problem. And you go into the day and you end up with a result that reflects perhaps even a subconscious expectation or lack of intention. Um, I find that, I mean, I've been trading for years, and that the days where I'm crystal clear on what I'm doing in terms of maybe a amount of money I want to make or the details of my strategy, because of course we're all developing the edges of our strategies, and sometimes that puts us in a, oh, I'm not sure if I'm doing this or that, and you're in this ambiguous space that can lead to catastrophic consequences.
Mhm.
So I just thought that was really interesting what you said earlier.
Yeah, 100%, man. Thanks for sharing.
Do you have any advice on sizing up? Like micros, kind of no problem, but I'm moving up to minis. I mean, I've traded large size in the past, but I'm on a kind of track at the moment, and there's something psychologically happens. You know, I believe we all have a kind of financial ceiling for deeper reasons from our childhood or whatever. You know, that you know, when we get to 10 grand, it starts to spin us out, or maybe it's a grand for someone else, maybe it's a million for someone else. But have you come across that kind of financial glass ceiling in terms of sizing up?
Yeah, 100%. Yeah. I mean, I like to listen to guys that are way more experienced than me too, and I listen to some guys that are like big gamblers, and they talk about this too. But and by gamblers, I mean like sports betting, poker, things like that. But what I think makes a difference is your overall level of conviction in the trade. So after a while, you're just doing the same thing more or less. You have your set of rules and everything, and you understand what you're there to do. You have a reason behind what you're doing. What it really comes down to is your level of conviction. It's like, are you going to commit to the trade or not? How much are you going to commit and how much are you not? That's it. And you have to just be committed. There's no way around that. I mean,
Yeah, I hear you. I mean, I'm sort of in a process of deep consideration about really changing the way I trade fundamentally, because I'm an order flow guy. Had a great mentor. That's all fine, but because of the fact that I'm taking losses, which is part of the game, and in relation to doing a size that makes a real difference, I don't seem to be able to get over that hurdle, which is why I mentioned Pax, because he trades really tight. He doesn't take losses. He takes what he calls expenses. We're talking 2 ticks only on ES, and he trades momentum out of the opening range. And I've been following him for about 4 months now, and it's very different from the way most of us trade, with a stop loss and a target and a percentage risk on the trade. His approach is much more bang, adding quickly to winners, and it is very impressive, frankly. But it's very different from the way I've traded before. But I got to do something, because I can't get past myself in terms of this sizing up, unless I can get my P&L over 2 grand a day. I've got a problem. And I can do 200 on micros is like child's play now. But
you gotta size up. First thing, it stems from your trading. You gotta have conviction in your trading. You gotta have data backing your trading, whatever it is. It could be historical data back testing. You could be forward testing and all that. You just need whatever it takes to get conviction behind the trades you're taking, and then you just have to commit to the level that you're comfortable committing. And you have to push yourself. So whatever your risk is on the day, your max risk, your threshold, like you said, like you're comfortable losing 1,000, 2,000, whatever, you have to just commit as much as you can commit to that, or as much as you want to commit to that particular trade. Or the way I normally do is I pace it out over the day. So I might commit a little on one trade, a little more on another, and I'll pace it out. And then if I think one trade needs more, I'll commit more to that one. It depends on the time of the day, depends on the level of opportunity you think. If it's a big move we're having right up into a big area, sometimes it's a big trade, basically. So certain trades that I consider to be my A+ ones, those I'm going to commit more to. I'm trying to commit more to these trades.
Right.
So that's really what it comes down to. You got to be pushing yourself. If you like, one guy in the thing, he said in the chat, he said, "This is just nonsense. You either have an edge or you don't." Which is true, but at the same time, you need to be pushing yourself. So like if it doesn't phase you at all, making 200 or losing 200, you need to. I mean, it's not really about the money, but you need to. If you have a system that's working for you and you know it's working for you and you're doing fine and all that, I mean, just keep trading it and push yourself. Just keep pushing yourself to the limit, and you're going to know where the limit is. That's all I could say on that. And the market's going to force you to learn.
Do you, with the daily loss limit, of course, that sucks, hitting the daily loss limit. And quite often, that's the straw that breaks the camel's back, and you ignore the daily loss limit, opening the doors to a catastrophic failure. How do you maintain those bad days, and you actually, have you
Yeah.
found a way to master that tendency to just kind of go all in?
Honestly, it's about knowing yourself more than anything. Comes with experience. I mean, you just have to know when to fold at some point. You just have to know when to fold. Some people have trouble doing this. Like I feel sorry for newer traders. Like I see it's my father who's been getting into investing recently, and like I can tell like he's not ready to fold. He's not ready to fold. He talks so positively about certain things that it's like I can tell like when he gets hit by something, he's gonna get hit by a train. The only time where it happened to me where I lost a lot more than I was willing to was on options. I started probably a couple of times this happened to me where I started campaigning a bit too much in an option. Or I think what happened was I was in an option and then I missed my exit, stayed in a little too long, and then that option the value of it ended up declining a lot faster than I thought. Then you find yourself in this option position that's like kind of worth a quarter of what you thought it was going to be worth. And then you're starting to trade the at the money options to try and make up for it, because you're still kind of trading on the day, and you may not have hit your loss limit, but you're in a way you're making things worse because you still have these options positions that are decaying in the background. Options day trading is not for the faint of heart. I would try to avoid it for beginners at all cost. That's when it happened to me where I went past daily loss limits and ended up with an outsized loss. That's the last time it happened to me was on options. And since then I haven't really been, if I do it, it's kind of small, but I'm more of a futures day trader than anything these days. Honestly,
do you have an upside target for your day where you kind of say, okay, that's enough, I'm done now, or is that not?
no, I don't really care, to be honest. Like I could, what I'm really, no, I would say no. I would say I don't have an upside target. No. I'm just, it really depends on what I'm coming in with on that day, I guess. But I would say the goal, I mean, I do think short-term goals are productive. You should have some sort of goals, like, okay, double the account. Like, it doesn't matter how long it takes, double it. Just double it. Do all that it takes, double that account. You should have at least a short-term goal, some sort of a short-term goal. You're not going to do it in one day, but whether it takes a month, 3 months, or one trade, I think that's all that matters. And upside target on the day, not really, because I know that I could have a trade that makes a lot. I don't know how much it'll make, but it could make a lot. Downside, I kind of do. Like for me personally, I mean, once I start pushing $500, I'm like, all right, like, what am I doing here? But I'm going to up that eventually.
Right. I mean, the issue with going to micros is it's an order of magnitude. So, that 500 becomes 5,000. And I know it's possible to just increase the size of the micros, but the commissions are a killer if you trade frequently.
Yeah.
Captain Morgan, what I would recommend, right, is it's all the same, but on your psychology, it's gonna really affect you. So I'd recommend get a prop firm account and do that crazy size on the prop firm account and see how you manage it. If you can't manage it,
I've had a pretty extensive go with prop firms, and it was with, I'm going to name and shame here, Apex. I had 20 accounts just about to get paid out, and my platform froze. They denied any responsibility. I couldn't close a position. It was obvious cheating, and so I've given up with prop.
The thing about Apex, right, is they give, well, the max, they give the most accounts, and the biggest payouts. But doing my research back in the day when I used to do prop firms, they're the worst in payouts because they will keep making new rules and new rules and new rules and new rules to make you fuck up, and you don't get a payout. But I was thinking you get a prop firm just to practice your own strategy, but you've already done that, and you've actually successfully even traded 20 accounts copy trade, which is it's copy trading and actual trading. It's the same thing. It's just different on your psychology. You know what I mean?
Yeah, yeah, it's certainly easier to copy trade a couple of $100,000 than it is to trade a single $100,000 account of your own money.
Yeah, definitely.
Yeah. Well, thanks for joining, guys. Appreciate you guys coming in here and chatting. It's cool. It's always good to network with other traders.
But yeah, as I said, right, this week I'm down 40,000. It's probably one of my worst weeks. You know, the thing about minis is the fees. The fees are crazy. Oh my gosh, like they really add up. Like I trade I look for 5 points to 10 points, ES 15 contracts, and I trade throughout before market open until market close, 45 minutes after market close, until like the market fully closes.
No,
So
wow.
I do the whole day. Yeah.
That's a lot. What I found, I mean, I think there's even data on this. I mean, just to cook on that for a sec, is that, I mean, humans, we tend to focus good for around 90 minutes. Once you start pushing the 90-minute mark, you're asking for trouble. Our focus starts dwindling a bit. So what I've been doing lately is I'll trade early morning, like, well, market open, you're saying like 9:30 until about 11:30 max, and then I'll come back in the afternoon. So I'll decompress in the afternoon. Ideally, if I don't have a trade on, I'll try and decompress for about an hour or two, go outside, talk to some people, make some calls, whatever it takes, and then come back for the afternoon session clean with a more ready to focus, basically, for another 90-minute session approximately. I find doing that works a little better than sitting there the whole day, you know what I mean?
I do completely opposite to you. I actually just sit down like the whole day, and I try to focus. I break focus all the time, but I really do try to limit test. I believe in pushing through burnout. You know what I mean? Continuously trying to push through my tiredness, my hunger. If I'm thirsty, I have some water. That's it. No food. Just sitting on my monitors until market close.
Yeah. Well, food is one thing for sure. I mean, I haven't eaten anything today either, but yeah, I mean, but water for sure.
Coffee, cigarette.
Yeah, basically, yeah. All right. Let's see here. I think I'm going to kill the stream, guys. It's been a good one. Thanks for joining. This is going to be up on YouTube afterwards. You guys can always check it out. Let's see here. I might read a few of the last comments and then kill the stream. But thanks for joining. I appreciate you guys a lot.
Cool. Nice meeting you, Captain Morgan and Vellero. How do I
Chris.
say your name?
Just call me Chris,
cool.
man.
Thanks, guys. It's always good to chat
Chris.
with
Good to chat.
traders.
All right. All right, let's check this out real quick. I'm going to answer the last couple comments, and then we're getting out of here. Let's see here. Doctor's not paying his taxes after 1.3 mil. All right, as a guy who hopes the people who move the market are going to let the setups play out and not trap me, I'm feeling hopeless since the July knockout of payout. Well, he's talking about prop firms. Yeah, ignoring daily loss limits are beginner mistakes. After 2-3 years, let's just see. Yep. I think it's very dangerous that trading totally consumes people to the max. It's such a deep rabbit hole. Yeah, I agree with that, Gregory. It is extremely, extremely, extremely dangerous. I'm seeing this happen actually in my dad right now, who's been getting into crypto for maybe, it's been less than a year, probably since October or something. And I've just been witnessing it like consume a part of him, similar to how it consumed a part of me when I started getting into investing. It's a good thing and a bad thing, I would say. Well, it depends on your predisposition. What's different between me and him is that when I got into trading, I was practically broke. And I think that that's more productive than getting into trading when you've got a big bankroll, simply because you have less to give away to the market and you're kind of starting from a clean slate. You're like, you're approaching a market with, you know, just the sweat on your back and just your belt basically and nothing. And you're just going there, you're learning the ropes for yourself and you got nothing to lose. So in a way, you're kind of you're already at rock bottom, so you can only kind of work your way up from there. Whereas if you come to the market with a big bag waiting, it's like almost as if you're just waiting to give it to some other traders that have been the hungry sharks in the water that have been waiting there for the bag already, you know. It's very dangerous. Trading is not for everybody. I really would not recommend it to most people. But there seems to be a big community around this whole thing. So it is what it is, guys. You know, keep at it. I just wanted to wish you guys a wonderful week. Keep your risk managed as much as you want to. And I will catch you guys in the next video and in the next live stream. Thank you for watching now. Take care. Have a good day.